Hey, it's Greg Harrelson here with Century 21, the Harrelson Group. And with my co-host Abe Safa, also with Century 21, the Harrelson Group. And as usual, we're just going to continue giving you updates on what's going on in the Myrtle Beach real estate market. So, Abe, thank you for joining me for another week. I sure do appreciate that.
Yeah, Greg, my pleasure.
Yeah, the market is moving, so there's no question about it. There's a lot of activity going on, and I think we've been doing this for almost a year and a half now. And every single time we've done one of these, I think we've talked about how the market's very active, it's hot, it's a seller's market, etc. You and I, though, you put up something on the screen just a minute ago, and that is, will higher interest rates crash the Myrtle Beach real estate market? And before we get into the numbers, I want to have that dialogue with you, because I'm getting people to ask me that question. There are people asking me that question. How about you? Is anyone asking you that?
Yeah. It's coming in different formats too, as well.
Okay.
So people are asking, they're saying things like, well, I'm going to wait for it to crash. It's coming, right? So people are actually predicting that it's coming. But yes, some people are asking if we think it's going to crash, or is there anything in the horizon that kind of points in that direction. So definitely more and more of those conversations are popping up now.
Yeah. And I'm getting the conversations from both buyers and sellers, like sellers asking me, hey, what's going to happen to prices if the interest rates go up? Will there be less buyers? And then I'm getting buyers to say things like, should I wait? Is the market going to come down? So I'll start off with some thoughts on this. Yeah. Number one, there is so much demand. Now, this is just kind of a hypothetical. This is not a data point that I can validate. So I'm just but I want to stress a point. Right now, it feels like as agents, we've got 9 or 10 buyers for every good property that comes on the market. Like, it's like we have so many buyers for a property that gets listed. Yes, as interest rates go up, yes, it will knock out some buyers for qualifying for what they wanted. So if they were qualified today for a $400,000 property and the interest rate goes up by 1%, then they're probably not qualified for a $400,000 property. Maybe they're qualified for a $350,000 property, but they're still a buyer in today's market. Now, there is a first-time home buyer that is qualified for a lower number. If interest rates go up, yes, maybe they drop off and they have to remain a renter. But when it comes down to, will the interest rates crash the market because it knocks out a lot of buyers? I really think at least what we're going to see this year is, instead of having 10 buyers for every property, maybe we have 5 buyers for every property. In either case, we have more buyers than we have sellers, which probably keeps it a seller's market and doesn't really crash the market. But from a buyer's perspective, you got to, what I would be doing if I was a buyer, I'd be thinking, okay, the prices are probably not going to come down this year, but the cost of borrowing money is going to go up. So if I'm a buyer, I would rather go ahead and buy right now to lock into the lower interest rates. It's significant. I think the buyer that thinks they're going to time the market and they're going to get the property at a lesser price, let's just assume they took a $300,000 property they could buy today, but they waited on the sidelines until it came out to $290,000. But in the same time, the interest rate went up by 1%. They would actually pay more money in increased interest payments than they would be saving in the depreciation or catching that property for $10,000 less. So buyers really need to understand the true economics of what's going on. Those are the reasons why I don't think there'll be a major crash of any sort, or any kind of crash of any sort in our market. What about you, Abe?
Yeah, I mean, that last point was a really important one, because I see a lot of buyers make that mistake, and they get so focused on the price and get so focused on getting a good deal that they overlook the percentage on the interest rate.
Yes.
Because just that one tick, that 1% more is a huge amount when you talk about a 30-year mortgage, even a 15-year mortgage. Now, overall, as a market, I'm on the same page as you with this one. You and I do a lot of research, and there has not been a single economist that I've listened to, have heard across the whole country, that's predicting prices to go down this year. Yeah. Not a single one across the board. So yes, we might not see a 20% appreciation like we did last year, Okay, but real estate prices should still be going up again this year. At the very least, they might be flat. Now, interest rates going up. I mean, yes, it's gonna. I think it'll soften the market a little bit. I think, like you said, instead of maybe having 10 buyers to every single property that's out there, it might go down to 7 or 5 or whatever the number may be. We can't predict that, but I just can't imagine. No matter how I look at the numbers, I just can't imagine seeing some sort of crash. The supply and demand is just still way off balance. There's just way too much demand for the amount of supply that's out there. It would take us 9 to 12 months just to even get to a flat market or a neutral market where it's not a seller or a buyer's market. And then from there, who knows what could happen. But we're so far from that. I don't see any crash coming.
Yeah.
At least not this year. You know?
Yeah. And so it really comes down to, like, if you're thinking about selling and you're thinking, okay, I'm going to wait, until I guess what I want sellers to think is, if you're buying and selling, meaning you're selling and then you're buying because maybe you're relocating or something, that's kind of like a lateral move. You're selling high and you're buying high. So I've had some sellers say, well, Greg, you know what I think I'll do is I'll wait, see if the market comes down. But the challenge with that thought is, what's influencing markets going up and down is a national issue called inflation. It's a national issue. It's not a localized issue. So if you see decreases in prices in Myrtle Beach, you're probably seeing decreases in prices in your hometown. So, excuse me, when you can buy lower in Myrtle Beach, you're probably selling lower in New Jersey. And so you're really not the waiting scenario isn't really benefiting you at any level, with the exception is if you keep waiting, when you do buy, if you need financing, you're actually borrowing at a higher interest rate.
Yeah, and I think you're spot on there.
Excuse me.
I think you have to look at the individual case by case. Like right now, if you have a condo in town, okay, I spoke to a couple of oceanfront condo owners this morning, and they bought at the height of the market. They've been getting crushed for the last 15 years or 14 years with a negative cash flow. They're finally in a position right now where they can actually sell and walk away with a little bit of money and cover their mortgage. Something like that, if you've been dying to get out of something that's been a negative cash flow year after year, it makes no sense to wait. Yes, can we possibly go up a little bit more? Yes, it could happen. But right now, if that goes up, if oceanfront condos go up some more, then just like you said, we're going to see appreciation across everything in the economy.
Yeah.
So yes, if you sold today, took your cash out and went somewhere else and put some money somewhere else, you're going to make up your money there. But pick and choose your opportunities. And right now, if you have a condo, I think there's a huge opportunity right now in selling your condo in this market if you've been trying to get out of it.
Yeah, good. Well, let's talk numbers. I mean, that's you bless us every week with a bunch of numbers, and let's see what you got today.
Yeah, let me pop that up on my screen real quick. Okay, so we'll start off with single family homes. It's not much news there. It's better than last week, right? Because as we getting out of January is typically the slowest month of the year. Not by any means was it slow. I mean, it was the busiest January I've ever seen, but it is the slowest month out of the year. So now towards the end of the month, we're starting to see an uptick again in the percentage of pending relative to what's on the market. So we're back up to 69%. I bet you next couple of weeks we'll be back in the 70s. So inventory is shrinking again, even more so than it was. We're probably sitting on, I want to say, about a 4-week or 5-week supply of homes right now across the whole market. So there's not a whole lot of homes out there. So getting tighter across the board with single family homes. Looking at new construction, honestly, there's more opportunities, it seems, out there with new construction. A lot of it is to be built. A lot of it is not even under construction yet, but buyers out there that are struggling to find resales are going into the new construction market and getting deals with these builders for 6-9 months down the road. But it's tight. Almost 74% of everything that's out there with new construction, at least in the MLS, is under contract right now. And then resale, you know how resale is. It's still super hot. So homes are still selling almost 62%. And I do think that number will continue to rise, unless we see an influx of sellers hit the market. A couple of economists out there that look at the numbers real extensively, saying that there's a backlog of sellers. There's
Yes.
a bunch of sellers just kind of been waiting and waiting, whether it was COVID, whether they feel like they just wanted to wait a little bit more for a higher price. So we could be getting into a bottleneck of potential sellers right now. And if that happens, it'll be a good relief for buyers out there if we did see inventory go up.
Yeah. Yeah, because it's not going to go up to a point where supply surpasses demand. But I would say one of the challenges right now that we could have in the marketplace is that number of sales might decrease in 2022 just because there's nothing to buy,
Yeah.
right? That'd be an interesting time where that sales decrease, not because like sales decreasing and prices increases. Usually it's like it's a little different. Like sales start decreasing when there's a shift in the market. But in our scenario, we may see decreased sales just because of lack of inventory. That it's kind of like other products in America. Some companies are experiencing decreased sales because they just can't get the product.
Can't get their product in it. So yeah. So we could see number of transactions go down because of this.
Yeah, good. But again, when we talk about the crash, the answer is we don't believe there is a crash in the horizon. We just don't see it because inventory levels are so low. So if there's a few less buyers, it won't be to a point where there's less demand than supply. At least not this year. We're not going to get there.
There would have to be some major factor outside of real estate for something to crash. Like, I don't know, cryptocurrency crashing or something major happening, the stock market, something happening outside of real estate, but nothing inside of real estate is pointing to a crash coming directly from real estate.
Got it.
There's just not enough inventory.
Yeah, good point.
Condo market, super strong. Less than a quarter of the condos out there that are on the market are available for sale on the contract. That's an extremely, extremely high number relative to what condos usually are.
Mm-hmm.
Usually you were in the 28%, not the 75% in the normal market. Off the ocean front, God, I was like, there's like nothing left.
Yeah.
This is the entire market. You subtract 778 from 993. That's what, 140, but not even 100 and can't even do math now.
Yeah.
Yeah, it's low. That's a super low number. That's every condo available on the market in the entire area here. We did less than 200 units out there.
Yeah.
And then oceanfront condos, we're going to see very similar. 71% of oceanfront condos are under contract right now.
Yeah, no inventory. I mean, I don't. I'm going to say it how I'm thinking, but it probably doesn't sound that great. I listed a condo, and me and the seller both thought that the price was kind of ridiculous.
Mm-hmm.
But he wanted to sell, and he was afraid to underprice the property. So he wanted to price it at higher than anything we could justify based on previous sales. And I took previous sales and I looked at the current trend and I added some additional money on top of that. And he and I agreed. He wanted to, and I agreed based on what he was trying to accomplish. We put it on for much more than even that and had multiple offers, sold it for full price in 2 days. Surely because there's, and remember when I said this earlier, I said this is kind of like just a hypothetical. It's like there's 10 buyers for every property.
Yeah.
And so as soon as we put one on, they're competing so aggressively, we're just having to figure out how to get appraisals to meet the buyer's offer, which usually requires some sort of cash sale.
So. Yeah, I mean, Coral Beach. I was talking to a guy just right before this call. Coral Beach, 1-bedroom oceanfront unit, 154.9. They're penning right now. These units were like barely breaking 100,000 6 months ago.
Yeah. Oh, I sold them I probably sold a unit like you're referring to. I probably sold it for 50,000. After the last crash of
after the crash, yeah, it's insane. So I mean, there's certain pockets right now. If you have an oceanfront condo, you really should look at this and give one of us a call. I mean, we'll gladly tell you what the numbers are. Yeah. You don't have to sell. If you're not ready to sell, that's okay. But at least know what is happening right now.
That's right.
So Greg, oceanfront condos, there's what 100 and I can do math now. So 163 ocean condos in the entire market right now. I've got more than that in the number of buyers looking for oceanfront condos just on my database, probably.
Yeah, I'm
Right.
sure.
So when you say 10 buyers to every property that's out there, I think it's a whole lot more when it comes to oceanfront condos. There's just nothing out there. That's how low the inventory is at the current moment.
Yeah, that's great.
So land, finally, let's look at that. That's starting to tick up again. Up to almost 25% of all land out there is under contract. So pretty much across the board, we're starting to see it tick back up again. The market's warming up again. Again, not that it ever got cold, but January is usually a slower month out of the year, but January was really strong, and now we're starting to heat back up again even more.
Yeah. Well, good. Well, hey, that's some good information. So will higher interest rates crash the Myrtle Beach real estate market? Abe and I, our opinion is no. We're probably not going to see anything remotely close to a crash. Will we see some volatility? I think we're going to see volatility in many areas in our economy. We're seeing it on the stock market right now. We'll see it in the real estate market. But that's just, there'll be some emotional swings, and hopefully you'll use us as a resource when you're kind of like have some uncertainty as to which direction you should go. Reach out to Abe or I. You see our direct cell numbers there. You can call us. You can text us. Just reach out to us, and we'd love to help you with any of your real estate needs. Abe, thank you so much, and we will do this again next week.
Thank you all for watching.
All right, bye-bye.